Hello, I'm David Vigil, and welcome to today's market update, being November the 3rd. Well, we had some pretty significant news behind us. We had midterm elections, and we've seen an overwhelming victory for the Republicans in the House, and also they closed a lot of seats in the Senate. And we also found some details about the quantitative easing part 2 that the Fed was announcing. They're basically buying over $600 billion worth of treasuries over an extended period of time. That's pretty unprecedented, and they're somewhat in uncharted territory. The reason why we didn't see the market move so much today, we did see some light volatility. However, most of the events were kind of priced in the market over the last few weeks, and that'll kind of give us an indication of why this market was so choppy here. But moving on to the S&P. We want to look at volume. Volume actually came in higher than it has over the past few days. So this is definitely a bullish sign for us. But a few things we want to kind of point out is, you see here, we have this ascending wedge. This is pretty typical of some topping patterns. And in the short term, we have a price target of 1203, as high as 1218. Now, 1219 is the actual high that was put in place way back here in April. Now, one thing I wanted to point out is, see again, and I've talked about this in several other videos, we have this MACD crossover, and this is a very long-term MACD, and we see a very similar setup here, right? Now, if prices do turn, we're looking at 1159 is the initial price target, which also is a 25% retracement. Going back here, this 1171. As I mentioned before, if we see prices close below this 1171, we can say that a top has been put in. Of course, this is tentative. Like I mentioned before, a lot of technical analysis is akin to driving in the fog, right? And what we're trying to do is develop scenarios that will help increase our odds of being on the right side of the trade. Looking at the Dow, we see a very similar setup. Again, a MACD crossover here, MACD crossover here. Right, and for the Dow, we have an upper price target. There's a good chance it's going to try to flirt with this 11,258 level. So we want to keep an eye on this level here, right? And if it does, it's going to form a double top. We see some negative divergence here, and this peak is higher than this peak here, which indicates that this had a lot more momentum going into it than this recent price move. However, this recent price move has surprised many technical analysts, and for some of us, we think it's a little bit extended. However, it's still trading within its trend regression channel, so 2 standard deviations. Again, like the S&P, a trade below or close below 11,020 would signify that that this market has topped, and the most immediate support level would be 10,921. Moving on to the Russell. The Russell paints a pretty interesting picture. The Russell has actually lagged the S&P and the Dow from this recent low up to this recent high. However, again, it's still trading within 2 standard deviations of its trend regression channel. So we see short-term resistance at 718. And if we see a pullback again at this 25% line, is 687. So we want to pay very close attention to this particular range that we're trading in now. If it does trade down, 687 doesn't hold, of course the next natural area of support is going to land right around 669, call it 670. Silver has been a pretty interesting trade, as I updated on Thursday, which is here. We said that this was setting up to be a fairly nice short-term trade, and it was. Our stop level would have been here, right? And we had a price target slightly above this previous high. Our new price target is in the $25 range. Now, would you trade this? I wouldn't suggest it, just because you're risking approximately $1.70 from here to here, right? For about a 75-cent gain from here to here. Typically, you want to avoid those type of trade setups. They tend not to work so well. Or what happens is it hits 25 and then it just starts to bounce back and forth, which could be expected because this was such a steep rise that you want to see this rest a little bit before making new highs. One of the other things I want to point out is that momentum has not confirmed this recent price move up here. So you want to be very careful with this particular trade. One other thing to point out, moving to gold, is that gold has not confirmed silver's move. So though silver has made a higher high, gold has not followed. In fact, from this low here to this high, it pulled back to this 25% line, right? Now, if gold were to break this very short-term trend line and break this momentum line, then we can see a price target of 135.94 to 137.50. So again, something we want to keep an eye on. I also drew some of these fan lines here. And you can see this is a 25% fan line, and it's trading right up on the upper edge of that. So it's trading in between these two bands here. If prices break through, then we can see this line here being support while it tries to work itself up to this price target. If not, then prices more than likely would fall, find support here, and either work out a longer term correction. We'll still see what's going to happen with the precious metals. So let's look at excuse me, the euro, and this is FXE for those of you who trade ETFs. One point of interest that I want to point out is this leg from here, right, which is slightly above 118, and closed here slightly above 132, is the same distance, right, as the 126 up to this most recent 140. So when we've seen a lot of congestion here, this was pretty easily forecasted, just because the movements generally have a price relationship to one another. Now, the euro has hit some resistance at 140.65. You can see it traded slightly above it, but then it closed below. Right, so we're either going to see a price return to the 136 or breakthrough. And the new price target I have is actually not 142; it's 143. And on the very long-term side, possibly as high as 148. This line here that I have, this bluish line, is a long-term trend line from the euro's all-time high. So between this 143, 148, as time goes on, this should prove to be an area of resistance as well. Now moving on to the dollar, after the Fed announcement, you would have expected to see quite a bit of a sell-off. However, again, the markets have priced in a lot of this quantitative easing. So the new price target that we have, if we can break this low, which there's a good indication given the stochastics is in a downtrend that we will, but we'll see prices trade to about the 74.50. Once this trades to 74.50, we should see a test of this upper trend line. A lot of folks are calling for a reversal in the dollar in the short term. Right now, I just don't see it. I don't see that this is a strong enough base to be able to support future highs. So again, it's a trade that we want to take a look at. If you're shorting the UUP, you'd want to place your stop level here, of course, right, with a profit target here, and this should give you a pretty good reward to risk ratio. Well, that's it for today. I'll update some more videos later on this week, and again, feel free to leave me some comments. I'm playing around with the format a little bit, so hopefully this format was a little cleaner, a little bit more concise. Give me your feedback and let me know. Again, do look forward to sharing some more videos with you in the future. Take care and happy trading.